Hello, this is Dave, and welcome to Equity Story. I'd just like to have a quick look at the ASX 200, and as you can see, again, it's another sort of pretty ugly day, and I think just following a little bit from the momentum from yesterday with those inflation numbers, and again, we've broken that short-term, that weekly trend line, which is not a good sign. We need a good day tomorrow. We want to sort of try and bounce off that. I don't think we will. It's obviously one of those Fridays where you tend to get a little bit more selling than buying, and by the way this is looking, I think we're obviously going to go down and most probably test those low levels around that sort of maybe 5,200, even 5,149. But when you look at the S&P 500, really that doesn't. It's holding above that level. We talked to you about. A lot of these analysts are looking at this 2,134 level as sort of near-term support. It looks like so far it's holding above it. So really, the S&P 500 doesn't nearly really look that bad, nor does the Dow. I think possibly what you can see, and I'll try and get this for you. Just show you a second. I think if you can see on, use that FinViz. I've told you about the website a few times. I think it's quite interesting. It does give you a sort of an idea, you know, of in the States on the American market exactly the advance and decline, and what the advance and decline lines are is actually how many stocks on obviously in the American market are actually being sold down and bought. And you can see 64% was down last night and 28%, and possibly as well that reflects obviously these earnings numbers not as good as what people hoped, and we really do need some good earnings numbers. The market's looking for some reason to try and take the market a little bit higher. As I've said before, use FinViz. It gives you, you can see these gold, the gold obviously looking pretty good, and you can see obviously crude up at the moment on these futures, and the Dow suddenly down again. So again, a good little website. Don't forget it. A lot of traders use it. You can use that front page. You don't have to pay for it, which makes it even better. Sorry. Then what I'd like to first of all just have a look at tonight is some of the trending stocks. Now, we've done brilliantly well over the last 2 years trending. Unfortunately, the market is it's hit a big brick wall, and nothing wants to trend. The only companies that sort of have done sort of quite well recently are sort of recovery stocks. People try and pick bottoms, but we're not interested in that. And it's stock after stock really that's been doing well over the last year. The good stories. Like your Macquarie Atlases. Companies that we traded. Again, just getting sold down. Your Dominoes. All these good companies just coming down to these longer term sort of moving averages. And I think that's just the general market, just give some more, your Sydney Airport, some of the great trends that we've been buying. So, again, we weren't in any of these companies, but we were in some other really good trends. Now, we've been really wary for the last, sort of, I'd say month and a half, 2 months, when we've been saying everyone's got to be careful. These elections, things are looking a little bit dicey. There's going to be a lot of nerves. This is the month of October. So we've been really careful what sort of trends we've been putting on. And the ones we got on, and for the first time in 2 years, are not really kicking any goals, but they're good stories, and we are pretty confident. Guys, we're going to make some good money on them. We're in the Northern Stars. Again, why? What? Okay, I wouldn't mind. We didn't buy it at 4. We bought it just below the sort of around 4, just below that 450 mark. It should have gone on with, didn't, because gold had that pullback. But gold's fighting back at the moment, and at the end of the day, with gold, you're trending two things. You're trending the stock, but you're trending the Fed, which is the most important thing. And obviously you're trending the Fed. You're trending gold. So when you look at the Fed and the panic on whether they're going to raise interest rates just 0.25%, whether it's going to blow up the world, well, if gold isn't a good place to be in, I don't know what is. So that's why we're trending gold. We're in it now. We're pretty confident. Even if gold had a shakedown, which it can, because you can see big movements with the way paper gold is traded. we're very confident over the medium term. Gold is going to be a great place to be and a really good hedge in a pretty volatile world, especially when you look at everything going in Syria and certainly obviously all the issues around the rest of the world. So we're really thrilled to be in Northern Star. And again, Evolution, again, we didn't buy this at $3, we bought it around here. Okay, it's coming back a little bit closer to the long-term moving average. Great stock to be in. And again, this is one of the great sort of cash money makers in the Australian market. So really happy to be in this. We're not always in the trending, going to be able to go in and make 5-10% quickly. Well, if it takes us 3 or 4 months, so be it. We're still in the best stocks. Again, ORE, absolutely love this company. With this one, we trended up to $5. Remember, hit that $5 4 times. We got out of it. We got in just above the trend line. Again, it's sort of on weekly charts. It's been pretty volatile, and I think that's just a sign of the market. But again, this is a company that is going to be bringing around 300 to 400 million in revenue next year, and again, trading similar to where it was in August last year, and even not far off it was in sort of 4 years ago. This is a company making money, and it's going to be making a lot of money. Most analysts have target prices around $6.20, $6.30, and again, short term, we think this has got at least $4.50 in it. We're happy to be in this stock, and that's why we picked it. We knew the time was going to be volatile. If the market went against us, fundamentally, we'll do really well with it. FXL, again, I think it's just range trading. As soon as it gets up to that sort of 240 level, we'll take that fully franked dividend for free. And again, FPH, one of the great trending stocks, happy to be in it. Again, like all these stocks I've told you, just the good stories flirting with these trend lines. And BAB as well, just come back flirting with the trend line. What we might do, we'll just see how it goes next week. We'll add to these positions. Yeah, we're trending it. We'll get a few more, because this is good buying. This is a great company, and a great company obviously growing its earnings. I think the only one that sort of didn't really work for us was obviously Vocus. But again, what we did, this fell really quickly, and this had a whole stack of things that went against it. Again, we put it as a buy at $6. I think even better buy. It's done this 50% retraction. Technically, this is a buy, and also I think fundamentally this is a buy. The revenue model. As soon as we saw this happen, we had a meeting and we said, "Hang on, what's happening with Vocus?" Okay, you look at the logic behind the company. It's been sold down because one of the owners obviously sold a lot of stake in it. The CFO sold, but actually the growth side of the company hasn't changed at all. The NBN helps Vocus. It doesn't, not like TPG, who are now paying $43 for a line instead of 17. Vocus have always paid 43. It doesn't affect it. It doesn't affect the business model. Vocus then gets sold down because some analyst comes on and says, they're going to have a problem integrating the companies they've incorporated. Well, they could do, but they haven't had a problem thus far. So we think Vocus around these levels is good buying, really, really good buying. So if you're not in the stock, maybe just wait till it starts, till we get these elections out of the way. But this is good buying around here. This is a buying opportunity, and it's really good. So we're really happy, although we're not trending at the moment, because obviously, as you know, the market's hit a brick wall. The only stocks that are starting to trend are sort of recovery stocks, and we mentioned it the other day. Companies like sort of Rio's looking really good. And what we decided to do, we did just because of the way we feel about the market, we're not obviously trending, but we are going to put on some 3-year growth stories, which are going to be a little bit aligned to this resource recovery. One of those we put on today was Tox. Go and read up about it. Again, it gives a pretty good dividend. We think they had a great acquisition recently, and there's great earnings growth, or not great, but strong earnings growth, I think, in the next few years. And it's going to be a really good 3-year growth story for us. As is Blackmores. Again, BKL. This is really... their quarterly came out, and the market just totally got the wrong idea of it. They suddenly, what's Blackmores? Their growth is all about China. It's never been about what's their growth in Australia. And sure, their growth numbers are down in Australia in the revenue, but from this time last year, they're still 220% up higher than they were last year in the China sales. So you look at China, 120, 150 million middle class Chinese. That's going up to 300 million in the next 3 or 4 years. The growth of Blackmores is going to be incredible. So I think there'll be a time that people say, Equity Story put this on a 1 4, I think it was $1.47. It went down below here, and they were saying buy. I didn't buy. I should have listened to them, because I think around this sort of level, it's giving a dividend of 4 on a P of 15 and growth at least 20. I mean, surely this are all the golden, in an Asia, where the growth in Asia, if you read the report, Indonesia, other parts of Asia, it's just going to be astronomical. So, and yes, we like it. We're nervous of the property market in Equity Story. Why do when you look at our portfolio, it's very much aligned to the China growth story, the ones we've been making money on, the BWXs, A2 Milks, TOX we just put on, SomnoMed aligned to health in America, Blackmore's, rural funds, elders. We've been very careful, trusting certain parts of the economy, and the parts we really do like is the growth in Asia, and that's really which I think, and it's why we've been so successful on our 3-year growth stories generally, because we're I think we're got our stories certainly in the right sector. I'd certainly be very nervous, and I think go on the website. I have got a good report, report about Vocus. Read up about it, and again, that report that Roger Montgomery wrote, I put it on Einstein's trending blog. Brilliant. And I think if that doesn't make you realize the dangers in property and being involved in companies related to property in Australia, then I think nothing will. That's all I've got to talk about tonight. Equity Story. Again, we've got another resource company, which is actually a resource company. It's a 3-year growth coming on next week. Enjoy the reading up on TOX, and I look forward to bringing you this report tomorrow. And hopefully, it's not going to be long. We get these elections out of the way, the market will start trending, we'll get some clarity, and again, we can start obviously getting some profits on some trends we've got at the moment, and then get into some more trends with a nice, strong, clearer viewpoint. Anyway, thank you very much for listening to Equity Story, and good night.